Hi traders, and welcome to my video on the Belly Forex System, where I'm going to show you how you can use this strategy to help you capture moves like this one for over 400 pips and counting. So you can see the Belly Forex System has been applied to my chart. It combines various indicators. So it's the auto trend lines, Barexo patterns, and support demand. You don't really need to get into the nitty gritty of what each of these entail. Okay, I'm going to describe everything for you in as simple terms as possible. I'm using the MT4 trading platform where I've downloaded the Belly Forex system and applied it here to the chart using the provided template. This is a pound-dollar 1 hour chart. Okay, you can use this system on any Forex currency pairs, so majors, minors, exotics, and you can actually use it on other trading instruments despite the name. So you can use it on cryptos, stocks, commodities, indices, etc. This is a 1 hour chart. I like to trade higher chart time frames such as the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be more reliable. That applies not just to technical indicators such as those implemented within this strategy, but also support, resistance, trend lines, candlestick patterns, so on and so forth. It also means less time chart watching, and when we can capture big moves like these for hundreds of pips, I'm not sure why you'd want to stress yourself out trying to trade the 1 minute or 5 minute charts, scalping them all day for a few pips here and there, not to mention paying your broker spreads and commissions over and over again. Okay, that being said, you can use any chart time frame. Okay, so I'm just going to break this trading strategy down into the various templates, aspects of the template. So this red zone here, see this red here, this is what we look at as a sell zone, and the green zone here is what we look at as the buy zone. So looking to sell high and buy low. Okay, don't want to do the opposite. You certainly don't want to buy at the top and you don't want to sell at the low. You have the trend lines here automatically placed on the chart for you, which is very handy, along with these support and resistance levels based on the Fibonacci sequence. Okay, so how do we trade this system? There are various ways you can trade it. It depends if you're trading reversals, you're trading breakouts, are you range trading, are you trend trading? For me, the best way is to trend trade. As the saying goes, the trend is your friend. I'm not going to look to trade against the tide. I'm going to want to trade with it. Okay, so the first thing that I'm going to do is I'm going to look for the direction. As you can see from these trend lines here, we're in a downwards trend. Okay, so that's the first thing. I'm going to look for sell trades or short trades because we're in a downtrend. I'm not going to look for buy trades. I'm not going to trade against the trend. Okay, so then the next thing is to look for a favorable entry point into this trend. Okay, so ideally we'd want to get in around the red area. Okay, so high somewhere. You can see the system does mark these candlestick patterns for you, which can be used to help time entry or just for additional confirmation. However, they're not a necessity for me. Okay, I might avoid a trade if I'm avoid a short trade if I see a bullish candlestick pattern, just to wait to see how it plays out first, but it's not the be all and end all. So what I would do is once I've seen this line, okay, so this would have been formed around here. Okay, it wouldn't have been there beforehand. Same with this one. So we wait for these to be formed, and then as we see the price makes these lower highs, okay, we're going to wait for an ample entry point either on this pullback. So we have this nice drop down here. This is a pullback, quite a deep pullback, and some traders, aggressive traders, may have looked to have entered on this breakout here. You can see a big breakout candle to the downside. We did have this lower highs obviously marked out by the trend line there. Nice wedge pattern formation here. See that wedge there, breakout to the downside. This is a potential early entry opportunity. Stop loss just above the high point, so around 20 pips, which is relatively tight for the 1 hour chart time frame, and that move could have been 350 odd pips. As price was falling, what I would have done is I would have used a trailing stop, so my stop loss would have moved. As soon as price fell down here, I'd have put my stop loss at break even. And as price dropped here, put my stop loss above this high. As it dropped here, price above this high, stop loss above this high. After this drop above this high, this drop above this high, so on and so forth, just trailing the move as much as possible. Basically, I like to cut losing trades short and let winning trades run so we can maximize good moves when we catch them. That way we don't need to keep re-entering and risk getting the entry wrong. I like to get one good entry on a big trend like this and maximize the move as much as possible. Okay, last thing I want to do is have a 20 pip stop loss, see this big move down here and get excited. Okay, 70 pips would have been good, you know, 3-to-1 risk to reward ratio. However, if we exit there, we're just leaving too much on the table. That being said, you can re-enter again, same as the initial entry. We're still up and above the red zone, so we're not, you know, selling low. Wait for a pullback. This is the pullback here. Draw your line of support and enter on a breakout into the downtrend. Again here, pullback, breakout, textbook trading with the trend, entering on breakouts in the trend direction. Okay, you see this happen on various trading instruments, okay, various chart time frames. As I said, longer term chart time frames tend to be more reliable from my experience, simply because there's more price data and therefore more traders will be watching usually the support, the resistance, and the trend, okay? And we can capture big moves. That being said, this did require some effort of our own. You can see we didn't just rely solely on the Belly Forex system. We did insert our own levels of support for this particular downtrend. You could also trade based on breakouts of the Fibonacci levels, okay? Or pullbacks. We'll stick with pullbacks. So what we do in this instance, once we see the downtrend forming, price drop in, you can trade on a breakout of any of the Fibonacci levels. Higher up, the better. So this fib level here, you could have traded that breakout. Could have traded this breakout here. Even more so after the breakout, price actually made a pullback, and then this level of support, which was support back here as well, and back here, then became resistance. Okay, so it emphasizes the strength of this level. You had a nice bearish engulfing pattern, which could have been the entry there to the downside. As I said, I like to draw my own levels, so I would have just drawn support regardless. Also here, there was a nice opportunity that was in between the fibs, but still for me would have been a good trade, because I can see that level of support is also going back to here. So I would have considered this as a nice breakout entry along with this one. Okay, you can see price reacting around the 50% fib level there as well. Okay, initially holds up as support, then becomes resistance, and you have a nice continuation of the trend to the downside. So you can trade on the breakouts of these fib levels, or even pullbacks where you see that they'll often act as support or resistance. Okay, you can see this level here acting as support, then does act as resistance. So whether you entered on the initial breakout, perhaps the more aggressive trade, or waited for a pullback. Okay, you can see a nice bullish candlestick formation there. Okay, inverted hammer. Market's still making these lower highs. Just go careful because you don't want to sell too low. Okay, for example, when you see price at the bottom of this channel, you can risk selling at the low. Ideally, you want to wait for a pullback, okay? And you see the market start to make these higher lows. Unless we get a breakout to the downside, you might want to just sit on your hands and wait, perhaps look at another trading instrument for some opportunities. No need to force a trade that's not there. Don't FOMO, fear of missing out, you know, don't force a trade, don't revenge trade. Don't let fear, anger, and greed blind your trading decisions. Have a good plan and make sure you stick to it. Sensible money management, good trading discipline, okay? Things that are often overlooked. Traders just looking for some magical unicorn crystal ball indicator that will pick the right trade every time. It's not the case. There will be losses. Like I said, if we have a 20 pip stop loss, we can afford to take a few losses here and there, knowing that, you know, even with 3 or 4 consecutive losses, we just capture one big trend like this and we can make back those pips and a lot more on top. And this is just in the space of a week or two worth of trading. Okay. So, yeah, trend direction with these trend lines. Don't forget, try to sell around the red zone if possible. I mean, it's not the be all and end all. It just helps you get in earlier, and then keep an eye on the Fibonacci levels. The Fibonacci levels could be used as target levels as well. Traders will often look to take profit. Not necessarily all the profit. You can close part of the position around the fib level and let the rest run. Okay. So that is the example of the Belly Forex system in a downtrend. Okay, so I just wanted to show you the Belly Forex system in an uptrend. Basically, we have the same principles. So Look to buy around the green zone if possible. Doesn't matter if price is slightly away, that's fine. Gonna trade in the direction of the trend. Obviously, we're in an uptrend here, so you can see from the trend lines. Gonna look to buy. So these trend lines would have appeared as they are around this point. You can see here the trend lines marked there and there. So anywhere around here, we would have been looking to place a long trade. Exact same principles as before. You can either trade a breakout of the Fibonacci's, so a breakout there, or a pullback. So the pullback to here on the 50% Fibonacci level there. 61% level, so you can see it holds up quite well as resistance. And then it eventually becomes support, so you could have traded again, either the breakout or the pullback. 76% level up here, so a breakout trade. It didn't quite make the pullback. That's the thing, if you're waiting for a pullback trade, it won't always come back to the fib level, but you can always just mark your own resistance or support. You can see this level of resistance then becomes support, so that would have been a late entry to the trend. Remember, you're still would have been valid, however, you are on the outside of this channel here, far away from the start. You don't want to end up buying at the high. Ideally want to get in early around here somewhere, so I would have probably marked my resistance level, something like that, and traded on this breakout here once I can see this uptrend. So we could have taken that breakout trade as well without necessarily needing to use these fib levels. Okay, you can just use the Belly Forex system if you like to determine the direction of the trend. Nicely display the fib levels on your chart if you don't want to draw them yourself. And you can confirm entries with your own support and resistance as well. Good thing about this particular setup is we had all these bullish candlestick patterns as well, just before and after, so the signals were strong. Okay, if you didn't get in there, where price is bouncing around now was actually another potential breakout trade there. Okay, you can see we had this move upwards, we had this pullback, and then a breakout continuation, another pullback and continuation there. So ample opportunity to hop in on this trend to the upside. Had you taken the first breakout, you know, around 140 odd pips profit potential. Again, you could have used a trailing stop, so stop loss just below the low there, looking at less than 10 pips, really good for the 1 hour chart time frame. And trailing stop, just initially move it to break even, then just trail below the lows. Okay, below the low, below the low. Once you see the market start to make these lower highs, you can consider closing part, if not all of the position. And you do also have some bearish candlestick patterns being marked by the system, which can also give a good indication of a reversal of the market direction, not to mention being in this red zone as well. So we can expect when these trend lines turn around, we might want to start looking for short trades. Bearing in mind, this is one thing that you'll find with technical indicators. In general, I mean, there are traders who may already be watching these lower highs here, okay? They may have seen a breakout of this line of support here, okay? This breakout here, then this support becoming resistance. So some traders may even be thinking, okay, in fact, we can even use that level. Some traders may have been looking at this and saying, okay, we've had a breach of this support line, a breach of this initial resistance comes support. There's now held up as resistance. We've got this bearish price action, markets making lower highs. They may already be in a short trade here, whereas the Belly Forex system has not actually redrawn the trend lines yet. That being said, you could have used the bullish trend line as a breakout entry into a downtrend as well. So we had the Belly Forex system, to be fair, is showing us that there's red candlestick patterns, aka bearish candlestick patterns. Okay, so we might be expecting this bearish reversal. It's had a breach of the trend line. Price has broke the 76% fib to the downside, so this could have been a potential entry point as well. Just depends if you are that strict on trading with the overall trend, you're happy to take perhaps more aggressive trades to get into a new trend as well. But there are some signs, bearish signs here with the lower highs. Okay. Yeah. You can always wait, you know, for see what happens here. If it just consolidates and continues upwards, or if it continues downwards, there'll be another pullback. perhaps the trend lines will reconfigure along with the Fibonacci's, and then you can look to time an entry into the downtrend that way. But this perhaps now is an aggressive entry. We're in the red zone, bearish signals all around. Okay, at very least, if you were in a bullish trade, you would have certainly been probably taken out by your taking stop, trailing stop by now if you hadn't already exited manually. Okay, well, hopefully that's given you an idea of the Belly Forex system and the different ways in which you can implement the various elements of it into your own trading strategy. As with any Forex strategy, or, you know, as I said, you can use a strategy on stocks, commodities, indices, cryptocurrencies. Just make sure you practice on a demo account to begin with, okay? So that way you can learn how to time your entry, your exits, how to use sensible money management, and just teach yourself good trading habits, you know, discipline, controlled emotions, you know, don't let fear, anger, greed, revenge trading, FOMO, and all these sorts of things get in the way of your trading. Have a plan, stick to it, good money management, and you can create a successful trading strategy. Like I said, I like to trend with the trade because we can capture big moves for lots of pips, such as those available in this uptrend, without needing to chart watch all day. Okay, thank you for watching. If you can like and subscribe, that'd be great, and I hope to catch you on the next one. Take care.